What's up, everybody? To everybody that already joined, thanks for coming in. First time we're doing a live stream. If you can't be here, no worries. We're recording this as well. I'm here with Nick, Merten, Teddy Cleps, and Antoni from Aleph Zero, since we're not messing with any last names for him today. Polish pride. That's how we're doing it. First of all, guys, thanks so much for, taking the time. I know it's right around Christmas season and you chose not to be with your families, but with me instead, which is really cool and I appreciate it. So thanks. Just a bit of an introduction. We're basically looking at this past year, at 2022. What happened in crypto? What went wrong? The two things that went right. Maybe three. We'll discuss. Basically trying to get through emotionally what happened this year, maybe kind of try to regroup together and see if there's any lessons to be learned and what we can do going into 2023, and maybe some things that we could do better as a community, as the people that are building this space, that are trying to improve it for everybody new that's going to be coming in, especially in the next bull run. So thanks everyone again for joining me. I've been excited for a long time to get you all on this podcast and discuss. Nick, if you'd want to start, maybe just kind of give your very broad perspective of give me a temperature check of how you think 2022 went for us as a crypto community. Very broad.
Yeah, I mean, I think I really draw a lot of alignments from more my macro perspective to this being our .com bubble era for crypto. I think crypto got up to around, roughly $2-3 trillion asset class, if you include the value or perceived value of NFTs as well. We had this blow-off euphoria, a lot of monetary easing, very similar to the period of time when Alan Greenspan was at the Fed, which played a big role in accelerating the overhyped valuations of the dot-com bubble. And I think we're going through really the first brutal year where a lot of that euphoria starts to come down. And it makes sense. I mean, if you think back to the 90s during that previous wave of internet-based innovation, you basically had all these different types of things that people were excited about. They were excited about the personal computer coming into development, the early stage of the web. You had all these different types of innovations that people were really excited about, which didn't have the grounds to actually build revenue, to establish themselves. And also, in many cases, you also had the same kind of cults of personality that we had in this bull market, both in crypto, but also in other technology sectors. So I would actually step out so much, not just from crypto, but really analyzing the broader asset markets. And I think we are going through what typically happens every decade or so during these really innovative periods. You have 10 years of really solid run-up, a lot of excitement, and you eventually get to a point where these companies are fairly valued at the midpoint and then start to just get to parabolic euphoric valuations, and then start to go through that corrective period that can last anywhere from 2 to 3 years. It's, I think, going to be a very brutal winter, and I think it's going to be the first bear market of crypto. Same exactly in this case with the dot-com bubble, but just in a different sense. I think the biggest problem that we had this time around is that the room was quite crowded. I think the penetrable market for crypto, at least in its current state, was really at its peak. It was at its peak limit. The monetary excess, the productivity or advancements of adoption of new technology like Zoom, remote work, all of that was at its peak. Right. And the same goes for e-commerce companies, you name it. So as you can already tell, I'm stepping pretty macro here, but I think that we eventually just got to this point where, at least in its current state, crypto as an industry was quite limited, and people started to take excessive levels of risk because of the projections that it had this additional leap to go forward. And I think we saw that with Luna, for example, with UST. And that was the initial domino that just left all the speculation out on the table.
So is your stance basically looking at the last 10 years as a bull cycle, which just
exactly.
Some booms and busts, but we've been moving up the entire time? So I don't want to put words in your mouth, but do I understand you correctly while saying basically we will not have another bull run in crypto the way that we've known it? Because essentially the last 10 years were a bull run.
At least not immediately. I think what we experienced over the last 10 years, I really use the term like secular bull market. So this is referring to the last more than a decade's worth of price action where equities have been on a straight line up and to the right. The Federal Reserve came in, saved every single dip in the market, protecting asset valuations, both in equities and property, and therefore in crypto as well. And I think generally what I'm getting is kind of making the argument here that we haven't really witnessed a real crypto bear market in the sense that I'm describing. Like we've seen the typical 80, 90% downturns that we've had time and time again. But I really think we're going to get something that takes us to that 90, 95% category on total market cap valuations, and one that is going to be more painful, focused on restructuring, and really is going to leave us in a position where the builders and the people who are still here right now finally actually get to redetermine and realign what this space is going to be about to a large degree through building the next wave of technology. So it's going to give us a whole clean slate, both on the centralized side of things, but also on decentralized side, to be able to completely revamp the industry.
So are you saying that the crypto dick butts that Teddy and I are about to buy are bad investments? And
no, that is perfect. That's totally a part of the next wave. You guys are ahead of the curve.
Okay, good to know. Just making sure. Teddy.
So you basically you kind of expect the crypto. Sorry, or just a quick question. You expect the crypto market to be relatively very boring for the next 3 or 4 years?
Yeah, I fear that for a couple reasons. I mean, I think the contagion is still playing out right now. And I know a lot of people are worried about Binance. I don't know if it's going to be Binance, but I think you're going to see it in a couple of maybe smaller, mid-sized players in the space who had dependencies on these larger companies. The way I think about it is like we had Celsius come out having to pause withdrawals back in May. Mm-hmm. That was a couple months after Luna. And FTX for nearly, I think, 3 or 4 months practically just acted as if everything was okay. And then we realized the third biggest exchange, FTX, is short on user deposits. So I think that contagion will continue to play out. It has killed a lot of the institutional interest, but I don't want people to take this as me being too negative, because to your question earlier, Alex, like I think that there will be a return to crypto. I mean, I think all of us here would agree, like, there is a clear wave of potential in this technology. NFTs, as well as DeFi, especially DeFi where I've been really passionate, I think we see that is going to be very useful. But in its kind of predictable and current state that it's in right now, I mean, it's all an enclosed system. You know, there's no real world applications where I'm taking dollars right here today and I'm lending it out to real businesses, where I'm doing things under collateralized, where I'm trading equities and securities outside of altcoins and digital tokens. So we're in an enclosed system right now, at least in the way DeFi is. And we are going to have to build the framework, push the boundaries, and be able to actually build something that's going to touch that wider audience. I think that's why we really hit our limit. We were kind of at the peak of speculative activity back in 2021, and we saw that with all the excess COVID stimulus. But I think now we got a plan for how are we going to have our next wave for the internet. And I use that long-term bear market analogy comparative to the dot-com bubble, because it took many years for the internet to get back to those previous all-time highs, and when it came to equity valuations. And only a few companies survived. Over 97, 98% of the IPOs that launched during the 5 years, I think, preceding up to the dot-com bubble, they vanished. They were gone. Yep. So some of them were darlings in the IPO area, and they've completely vanished.
Okay, so
there's going to be... Oh, yeah, go ahead, Teddy.
I'm primarily in this industry. I approach as an investor, and after this conversation with Nicholas, I'm probably going to ease down on my dollar cost average, kind of diminish a little bit my recurring buys and try to make them last for 4 years instead of one. But I mean, I think that one of the worst things that has happened for crypto in this year is probably the loss of trust within the industry. All this industry, I mean, the fact of being decentralized, the whole main narrative was the fact that you're distancing yourself from these nasty centralized institutions, and you're kind of taking the power on yourself. And it didn't really age well in any way or form. Yeah. I mean, people were making ridiculous amounts of money. They were staking money on every app, basically give you these rewards, which were from 10 to 17 to 20%, like in this scenario of Luna, where it's something that we have never ever seen before in the history of investing, where you can just get your money, place it somewhere, and just get a comfortable 15-20% per year. And I mean, if you just kind of did 1+1, you realize that it's just not going to work long term. The fact that you're borrowing money for a very small percentage, but if you're the borrower, you actually get a huge percentage back. I mean, it didn't sum up to begin with. And I think that this huge collapse, as much as it's very, very painful, and it might take a lot longer to recover than we expect, especially now that it might take 3 or 4 years, I think that it's one of the best things that has happened to crypto, because it's really putting people in a very, I mean, it kind of gave us a little bit of a reality check, in a sense of like, okay, well, any platform that is offering users these returns are absolutely insane, like stay away from it, because there's a big chance that it's a Ponzi, because we have so many case studies that kind of showcase that any exchange offering this went bankrupt or has declared bankruptcy. I mean, that has declared bankruptcy. And I mean, we've seen it with FTX, where I was shocked by seeing how many projects, how many huge investment funds and these outstanding traders were leaving their entire net worth on a centralized platform. And I'm kind of hoping that we're going to see the new trend where people are embracing the fact that we are in an industry that is by nature decentralized, that they are taking the money out from centralized platforms and keeping them in their ledger. I mean, I did a poll on Twitter a few days ago. So post Luna, post FTX, post Celsius, and I've asked, I mean, do you store the majority of your funds on a centralized exchange on a ledger? And I think that 3/4 said ledger, which probably means I'm actually not so convinced that people were actually honest. So just the fact that 1/4 of the people that answered that still keep most of their funds, if not all of them, on a centralized exchange, it's still not good at all. And I'm kind of hoping that we're going to see people kind of move towards these decentralized.
But what does that even mean, right? Like, because it's not binary, right? Like where you keep your funds, and that's one issue that I have with a lot of these polls is like, yeah, okay, I keep X% on a cold wallet, but then, and so in their mind, basically they're thinking, well, it's like, yeah, I'm being secure. It's like, yeah, but you forgot about the other 40% that you keep, on Binance or whatever else, right? And that's one of these issues. Like you see a lot of like basically people virtue signaling now that's like, oh, it's like, I've always used only a cold wallet. It's like, no, you haven't. No, you haven't. Like we've all done it, like left money that we shouldn't have left on an exchange. Like it just happens. It's probably, just part of the crypto nature right now. But one thing that I wanted to, your headphones died? We can't hear you, Teddy. Okay, so one thing actually I wanted to ask Antoni, we'll have Teddy join back in a sec, is Nick, when you were talking about DeFi, when you were talking about the things that you were excited about, and this is something that I want to ask Antoni, and Antoni, I hope it's not too much of a curveball for you, but it's no shock that everybody that's here on this live stream, on this recording, is bullish on DeFi. Like we're big proponents of it. But is there a real use case for DeFi? Like I've been seeing a lot of people talking very negatively about it, especially like it's easy to kick someone when they're down, right? And right now, as people in crypto, as people that are building this industry, like our industry is down. We're down bad, sir. And you see a lot of hate on DeFi. And it's like, do people want to use it? Is there any real use cases for this? Or is basically everything that's been built to this moment and not taking any shots at, Uniswap or Compound or Aave, because I think they're doing amazing things right now. But is this kind of like our, I don't know, GeoCities or Netscape or any of these other kind of moments, and the things that are actually going to be used, the Googles, are yet to be built? Antoni, do you have any thoughts on that?
Sure. So the first thing I would point out is that also with regards to the first question is that I think that we kind of, as an industry, we still suck at educating people. Because your sort of normal users or holders hear crypto, and then the difference between DeFi and CeFi, keeping funds in the cold wallet versus keeping funds on the exchange, that's still unclear for a lot of industry participants. So yeah, my takeaway, I mean, it's an argument we've all heard, and I'm sure you guys are obviously like familiar with this one, but Going forward, like we don't have a solution for that internally at Aleph Zero, definitely education-wise. I think this is going to be a change that will gradually happen over the next probably 2-3 years, maybe longer, because it's a mindset change. It's, giving up convenience to some extent, giving up the comfort of just trusting somebody else with whatever assets you have versus taking responsibility and keeping them yourself, whether that's wallet, whether that's just your memory when it comes to the seed phrase. It doesn't matter, like it's on you. And that's just not great for a lot of people. So there's a lot of talk about, like social recovery methods for different wallets where you have your 5 friends and they help you recover your wallet if you lose the keys, but maybe we can touch upon this afterwards. And then moving to your question, like, is there a use case for DeFi? Like, I obviously think there is, because it's just a better product. Like, it's cheaper, it's faster, it's, international, it's cross-border. Like, it enables you to send $100 million from, from maybe, I'm not going to use the US in this example, but let's say from Brazil to Portugal, and you don't have to go through multiple intermediaries. Now, in March, there's going to be something very interesting happening in Europe as well. In European Union, there's going to be something called the DLT pilot regime. And it's basically an invitation to participate in a sandbox for, entities and companies and businesses that want to try and figure out the best way to put securities sort of on chain and enable regulated trading in that way. So, like, from what I can tell, there's a lot of interest on the institutional side. There's a lot of interest on the retail side. Like, my non-crypto friends didn't necessarily change their stance on the industry. But the problem is that whenever we have a bull run, those actual use cases that are oftentimes boring and more of cockroaches and not unicorns, they cannot get through with their messaging when compared to, say, louder, more exciting use cases that oftentimes just die out as soon as the bull run is over.
Yeah.
So basically, you're not the cum rockets and all those things that popping up in the bull run. Like, I shouldn't be buying them right now. Basically, they're not the next unicorns.
Alex. But also saying cum rocket and popping in the one sentence. It's
real project though. Real project.
I know.
Real bull run project.
That. Like, it's.
Yeah, there's actually there's Nick. We talked about this when you came on the show like a few weeks back, and there's one thing that's very interesting about this bear market that we're in right now, which is back in 2018, 2019, and I think we talked about this like when we saw each other in person recently as well, is there was a lot of BS that simply died out in 2018 and 2019, and that's something that I'm not really getting this time around. Like, I feel like there's a lot of projects that are still either, trying to raise, that are still building, that are just like the most preposterous, Ponzi-nomics, trying to fit everything together of, metaverse, GameFi, play to earn, move to sleep, and everything in between. And it's one of the reasons that, like, it doesn't feel like any other bear market, and it doesn't, and it puts a lot of what you said very eloquently in the beginning of this live stream. It puts a bit of a question mark for me, like why are they still here? It feels like nature has still not done what it was supposed to. Yeah, exactly.
Yeah, I can definitely speak to that a bit. There is one dynamic that's really important to understand versus 2017, which is that a lot of projects learned from 2017 to, rather than raise in the form of ETH, which was kind of that base currency, it was a conduit to raise capital for ICOs, was to raise in ETH. And it was kind of a double positive during the bull market, because you already had these projects raising absurd amounts of money. But imagine what you're raising is a volatile asset that is constantly appreciating and beating out any other asset class. So you had these early stage ICOs that were making tons of money, not only just from the raise itself, but also from the appreciation. That was a double positive during the bull market. It became a double negative negative during the bear market. And that made a lot of projects go from having endless amounts of funding where they could imagine hiring as many people as possible and scaling out to practically having nothing. This time around, though, in 2019 onwards to 2021, a lot of projects raised and still are raising in stable coins. So they started to diversify. ETH is still used a lot, but you're also having USDC, USDT, and again, as we saw as well, which brought down Ethereum's capital, people even going as far as using algorithmic stable coins like UST to raise Bitcoin, like all these different things. So I think, again, that's what's allowed people to be able to sustain much longer. I think that's probably one of the biggest kind of underlying explanations. But I think another one as well is that it's a proof that there's still so much excess liquidity from the last decade that's out there. People who just made ridiculous amounts of money doing exactly what you guys were describing. Same old kind of rug pulls, outright scams, protocols that didn't build much, that kind of gave those empty promises, raised a bunch. A lot of VCs who just made tons of money who are incentivized to allocate it somewhere. So I think that that's why the absurdity can go on for so long. It's the same thing we're seeing, I think, in the real economy, in the labor market, not to get too macro, but like in the labor market right now, we have some of the highest interest rates we've had in over 20 years. We're getting up to that pace to being the highest federal funds rate, some of the highest mortgage rates we've had in years. But the labor market is red hot. It's still companies are still hiring people, out competing one another on wages, and that's a symptom of that excess money that the Fed's created. One thing I wanted to deviate a little bit back to, I don't want to ramble too much, but I think you and Antoni were
Feel free to ramble.
You and Antoni hit on an area that was really what's close to me, which is why, what is DeFi going to look like? And it is really all that we worked on for the past couple of years. Is it like a failure? And is DeFi ever really going to come back? Same with NFTs. And as someone who doesn't know as much about NFTs or wouldn't be as knowledgeable in that as DeFi, I really have to say I do see that there is potential in both of them. I don't think they're going away. They are permissionless. There are varied use cases. But the problem goes back to a point I think I brought up earlier, which is that everything we've done in crypto so far is interconnected within the existing crypto ecosystem. What we saw in NFTs over the last bull market was really no different than CryptoKitties. We saw that with Axie Infinity, as well as things like Bored Ape Yacht Clubs. They're PFPs, right? Really simple versions of NFTs that took off. And in the case of DeFi, what we really just built was a lot of the already existing centralized crypto products in a decentralized format. You take Uniswap, one of my favorite decentralized exchanges in crypto. All you're basically trading are crypto-based assets. You're not able to trade exactly as Antoni hit on, whether it's regulators or whatever reasons it might be, exactly as Antoni, you put perfectly, man, which is that you can't trade securities. You can't, there's still no foreign exchange swap pool, so I can't go from a dollar stablecoin to Japanese yen. I mean, there's a lot of these really traditional exciting market use cases, but they require an entirely different framework to be able to be built in the way they need to be built and to be able to reach a wider audience. I'm a big fan of Ethereum. I had a crypto wallet on Ethereum, but I got to be honest with you, even though Ethereum's the only one that survived here, and I never was too much of a big fan of Solana and Avalanche and all these layer ones that popped up overnight, I have to say that I think even Ethereum is at risk at being the AOL of our time, and potentially having new companies or new protocols that during this really slow, dark period are going to rethink how protocols are built from the ground up. I think, again, from what I learned about Aleph, I think you guys are doing a great job, Antoni. Outside of this, I've seen what Radix is doing. There's a lot of these networks that are really trying to go from the ground up and think about what are Ethereum developers in Solidity? What are they struggling with right now? For some guy who has this really big application idea, what's preventing him from building it? Is it bridges, on-ramps, KYC, KYB guardrails? Some of the things that, again, I think can be a bit touchy for some people, but it's what's going to be needed to get practical applications. If you want to take DeFi from being a $100 billion market to that multi-trillion-dollar market, that's the conversation we have to have. And this is the time to do it. Once, exactly as Teddy, you hit on earlier, we filtered out all those bad actors, and we have more of a demand now more than ever for DeFi, I think, as a technology.
So I'm going to play devil's advocate a bit here, because like I don't want us agreeing on too much. Just so you know, like I'm trying to stir something up, but I'm not. This is not exactly what I think 1-to-1. But you mentioned Uniswap, great product, great team. You know, they've done a lot of great work. But on the other hand, like when we're talking about, on one hand, we're talking about educating users and user protection and making sure that, you know, people are actually, they know what they're doing going forward. On the other hand, we have that report that, what was it, like 95% of contracts added to Uniswap, you know, not by Uniswap, I need to add this, they're added manually by users. 95% of them ended up being scams, right?
Yeah.
Right.
So like we can build all the permissionless protocols and companies and projects that we want. And Antoni, I know you spoke to the point of it being a long road and it's not going to happen overnight. But on the other hand, like 95 seems kind of absurd. And how do we protect against that? And that's exactly where all the regulatory uncertainty comes into play, because regulators see reports like this and they say, well, we need to do something. And they're going to do the only thing that they know how to do, which is probably, you know, just kill it, IP block, Uniswap, for anyone that's US based, if we're talking about the SEC or the US government. And how do we fight against that? Because like we don't have a lot of time, so to speak. We don't have a decade to educate everybody if, you know, we're just going to start getting banned left and right.
No.
So where do we go from there in a way?
But that's a $1 million question, right? Can you, first of all, sorry, does my mic work?
Go ahead.
My headphones died.
It does work.
Yeah, it works. Yep.
Okay. Well, that's the $1 million question that I kind of asked myself as well. I mean, for people like us that we are kind of crypto geeks, we've been doing this for years. Uniswap is like a paradise. We kind of know how to avoid a scam. We kind of go on CoinMarketCap, we get the official contract, we copy paste it on Uniswap, and then we kind of know that we are interacting with the original and authentic contract address, and we are swapping the right coins. But like, whenever I kind of give or I link or explain Uniswap to my non-crypto friends, for them it seems unparalleled, the concept of using this website. I mean, even if you write like any coin that you will think of, even if the coin is not popular in any way or form, you would still find 5 or 6 different alternatives minimum of that token. And yes, we do need regulations to kind of step in and find a way to prevent this from happening. And as you've mentioned, I mean, you can the US might come and start blocking people from accessing these websites, but all you need is a VPN and you can kind of surround this. So like it's beautiful that it's decentralized, but at the same time, the fact that it's decentralized kind of makes it really, really, really hard to build something that it's scalable and accessible to everybody in a safe manner. And I have no idea how we can kind of circumnavigate this issue of having safety and decentralization at the same time.
I think we just need DSEC products. There's this term that's been increasing in popularity recently, which is decentralized security, which is basically protocol-based security, meaning you have, say, a cybersecurity, you know, protocol that is accessible through a browser extension or whatever it might be, and it tells you whether the website, the tool you're using at any given moment is safe for you as a user or not. So this is like one thing. And like we kind of also have one of those use cases in the ecosystem, and they're called Interlog. Awesome team.
Good people.
Good, very good people. Yes. So this is something that we're also bullish on, because this allows users to basically, like, not self-regulate, but be equipped with tools that allow them to sort of navigate the space better, even if they don't have enough knowledge and that they're not like industry natives. And also, Alex, you touched on, you know, one thing is the security, which I believe to some extent is going to be solvable with tools like Interlog. And the second is over-regulation, right? Because we're strong proponents for regulation, just a reasonable one, and sort of executed in a dialogue-based fashion, not necessarily about what's been happening, sort of to some extent with on the U.S. market. Like Switzerland is amazing, honestly, and the level of collaboration in Switzerland is very substantial. The level of support is substantial. Like the sort of the entire market is stable. The process is to say get a no action letter. This takes a long time, but once you get it, you know that your project is not going to be looked, is just going to be taken seriously on that given market, and it's going to create a precedent for other markets to also consider any given solution as, say, in our case, as utility, and the one that sort of tries to collaborate with the regulators proactively. And I think everyone just wants that also from the regulators, which is not, straight out bans, but conversations.
That's a good point. Yeah. It's, there's, when talking about regulations, this is something that I've said a million times over is, and Antoni, you touched upon this, is basically do everything you can to self-regulate so that we avoid over-regulation, because that's the only real killer that I see on the horizon for us. As we can tell from the markets, and, Nick, Teddy, you can talk about the markets in a way better fashion than I can. You're much more knowledgeable about this subject than I am. But we can see from the markets, like even a black swan event like FTX, it didn't kill us. We're still here. Like Bitcoin's not at zero. We'll be fine with enough time put behind us. But when it comes to a lot of these regulations and a lot of these blanket statements, like even now we see the SEC going after Bored Ape Yacht Club and trying to launch an investigation into Yuga Labs, basically claiming that Bored Apes are a security, right? And I don't know if you guys have any thoughts on this, not necessarily what my question is, but I just see that regulation and the misunderstanding of what the market is probably the most detrimental thing that we will be dealing with going into next year, especially after what happened this year. And one thing that a lot of these regulators, and I'm thinking about the US right now, like I know, Antoni, you talked about Switzerland. There's a lot of other jurisdictions that are doing a lot of great work. But one thing that really worries me is that the collapse of Celsius, the collapse of FTX, the collapse of 3AC, of Alameda, and everything else in between is seen as a failure of crypto. That crypto is not working the way that it's supposed to work, which, we, the people in this industry, know that that's ludicrous. That's it's single points of failure. It's people that are either, they're scamming people outright, they're acting as criminals, or they're negligent, or anything in between, right? So how can we actually move forward when there's so much also misunderstanding of this space? Because Bitcoin's still working. Like, this is one thing that I said, like I actually had an argument, debate, let's say, a few weeks back with someone where I said that crypto's working the way that it's supposed to work. Like, nothing broke. Aave didn't break. Ethereum didn't break, So it's very disheartening to hear. I've been watching some of these FTX, the Congress hearings, and it's not looking great. And it's one of these moments where I feel like we've come really, really far as an industry, like starting, I personally started in 2015, 2016. Like we've come so far, but I still feel like there's these topics, like we didn't move in the right direction at all in the last 7-8 years. And I think that's one of the things that's extremely painful to me personally, right?
Well, I disagree that we didn't really move in the right direction in the past few years. I think that in the past 3 years, in the past 5 years, in the past 7 years, in terms of adoption and awareness of this industry has skyrocketed.
Oh, fully agreed. I just mean when I hear some of these politicians, right? Like I just feel like that's all I meant. But I agree. Yeah, go ahead. Sorry.
No, as you said, I think that the bad thing that is happening right now is that the fault is following on crypto and blockchain, and not the companies that are actually using blockchains to do harm to people. Sorry, I have people that are commenting if I can turn off my microphone. I'm charging my headphones, and I'll kind of go back to my normal setup in a minute. And by the way, Alex, your webcam is paused. That's at least what I am.
I think it's just the internet connection, maybe on your end. So everything. So just so you guys know, like everything, like live stream is live stream. There's things that are gonna get messed up. If you see someone that is frozen for a bit, it just means that the recording's fine. It just means that the upload's basically not keeping up, but it's preserving the recording. But also to everyone that is watching live, like I know there's going to be some issues with gain and things of that nature, but I'm going to handle everything in post. So if someone's too quiet, I can't bump anyone up anymore right now, but I'm going to fix it in post-production later. Sorry, Teddy, go ahead.
No, well, look, I think that these bad things that have happened, again, they are turning and will turn in great opportunities for the industry. For example, like exchanges are now all doing these audits. I mean, every single large exchange is taking a step forward in transparency. So they're kind of trying to prove the entire community that their exchange is safe, something that they simply didn't do 4 weeks ago, which is would have been something that was supposed to be compulsory for any exchange. And nobody even questioned the fact that exchanges didn't have a public dashboard where you could kind of see, if they were solvent or not. So again, the fold fell in the wrong direction, but I feel that we are taking the right steps to kind of prevent that from happening again. I mean, you have exchanges like Bybit. They've just launched a kind of a sister exchange, which is a decentralized exchange connected to the main centralized exchange to kind of, you're not safe enough to leave money on your centralized exchange. Don't worry, you're still part of a platform, but you can actually put those funds on a decentralized exchange with a kind of an easy to use interface. So to kind of recap that, yes, the fold didn't really go where it was supposed to, but we are smart enough and innovative enough to kind of try and fixing it and preventing it from happening again. And I'm very, very optimistic that we're going to move in the right direction.
Yeah. I could maybe share like two things as to build on Teddy's points. Like, I think the industry, like what we went through over the past year was kind of, in a sense, ironically enough, it was necessary, because if it was allowed to persist, it's best to get it over with. If people could get away with, running, huge ticket investments in things like Luna, if there was this kind of level of absurdity, it means that there was the money to be lost, and there also was the ability for these participants to get away with what they did. And the only thing we can do from this point on, exactly as you said, Alex, is to not only like self-regulate as much as possible, but really like sit back, ignore the extreme voices of any side, like Bitcoin maximalists or people who, again, want to let anything go in the altcoin space, and really sit down and I think and say, like, how are we going to make this industry look over the next 3 years? We're not going to get an opportunity like this again. So let's sit down and let's think about the major hurdle points. I think the first one is user experience. So, like, yeah, I know Teddy was hitting earlier on and stuff like about that poll, like he did, asking people about self-custody. That's the solution. Like, DeFi applications have worked. Self-custody is highly secure. It's using the same kind of encryption that we use for bank systems and military communication for encryption. So that self-custody is one key component, but the problem there is user experience. If user experience in the next 3 years is still going to be me using MetaMask or having to use like these really just kind of okay fiat on-ramp tools to move money into a self-custodial wallet, and it's not some crystal clear user experience where fees are predictable, I can access all my core services that I would access on a normal traditional centralized exchange, we have at least not done the bare minimum to ever come back. And I'll be honest, I really don't think we deserve to come back if we can't sit down and actually think about how do we make that user experience for the next audience. The reason we hit our limit to a large degree is because of that user experience and how it's. I always think I use Curve Finance and like the intentionally poor design of Curve Finance as a DeFi app as this kind of macho attitude that we have sometimes in crypto. You have to get it to be a part of it. And I think we should be focusing on further convenience for people and further, like, to be honest, I don't mean to be controlling by any degree, but like some degree of guardrails. Exactly as you mentioned now, it's like 95% of those scams on Uniswap, right? Uniswap does their best to have filtered token lists. So you're only going to be getting assets in this case that, as the exchange, feel are liquid tokens. They have teams behind them. So it's a lot about the user experience overall. I think the second thing as well, again, going back to that point, if we really don't come up with use cases outside of what we've built now, which I think, to be honest, again, if we're talking about securities trading, like STOs in general, investing in real world assets, how NFTs could potentially be a vehicle into that as well. NFT royalties, where you could really start to monetize NFTs and, basically allow people to have shared revenue on certain types of investment ventures. All those things that, again, can step into the multi-trillion dollars or soul-bound NFTs, where, for example, if I know that Alex is Alex on chain, I'd be willing to give Alex a loan for 25% Bitcoin collateral or Ethereum collateral versus, say, 100 or 200%. you know, I trust you, Alex. So, but the thing is, like, the main thing there is that if we can't get those use cases out, we can't get back to trillions of dollars in value. There's no way. And I think one thing to kind of close up this point here is if you look at the dot-com bubble, again, back to that analogy, the dot-com bubble collapsed not only because of the absurd valuations we're at, but it was clear by that point that the growth that the internet was experiencing during that period of time was going to stop. It was going to slow to a large degree. And that's why, again, a lot of internet companies went down, they restructured, there was consolidation. And then as we look now at 2020 and 2021 as kind of this peak period of euphoria in equities and crypto, I think we're going through the same exact thing here where we're realizing that the growth is stalled. How is Amazon going to grow any more than it was during the pandemic when everyone had to order online? How is Zoom going to grow any more than that? Same with Google and Facebook with advertising revenue. And if you look at what they're doing as companies, I think outside of maybe Meta, making this huge bet on VR and augmented reality, there's not much major innovation. I mean, if we're being real about it here, like ChatGPT, OpenAI, like a completely smaller subsidiary and like a AI-based company, they just created one of the most exciting things I think we've seen in some time. And it didn't come from one of the big 4 or 5 tech companies. And I think that's a very good visual metaphor for when innovation and growth potential comes to a screeching halt because you realize that you've come to the peak. And just from an investment perspective alone, it takes usually about 2 to 3 years for that recovery phase, where either those companies are going to step up to the plate and innovate again, or new companies have to come up. People who completely rethink the experience of how we interact with technology.
Okay, so what do you guys think about this? Because I actually saw the president of Bolt. If you guys know Bolt, they're an Uber competitor. Mm-hmm. So you probably won't like it that I just called them an Uber competitor. But I saw a LinkedIn post very recently where he said that ChatGPT basically with this, whenever it launched to the public, what was it, like 2 weeks ago, I believe, maybe a bit longer, that just this very introductory level of interfacing with an OpenAI has already multitudes more use cases than crypto has in the last decade.
Yeah.
That's the argument that I saw. And it got me thinking, like, I obviously don't agree with this because, like, I'm working in the industry that I'm working in. I just don't believe that. But when you look at a lot of I talked about this with Charlie Shrem on his podcast a while back, is one thing that worries me about all this FTX drama is the amount of talent that can potentially leave crypto. Right? Because I know a lot of smart people that their reaction was just like, I'm tired. I'm tired of these scammers ruining my industry. So I do feel that right now with this bear market, and I'd love to hear your guys' thoughts on this, with so much going on in AI, with a lot of this uncertainty because of Celsius, because of FTX, and a lot of these people that just were essentially parasites in our field. I do feel like it's this kind of perfect storm for not just a lot of hype dying down in crypto, but for a lot of people just leaving and a lot of interest just kind of shifting somewhere else. Do you guys have any thoughts on that?
Well, something that always kind of bothers me is the fact that the interest in the industry is always incredibly correlated to the prices of the asset. I feel that, NFTs wouldn't have had a fraction of the success that they've had if they had a price and a value connected to them. I'm sure as hell that nobody would have been buying monkeys and all of the copies that came from it if they didn't make you rich or in hope of you buying them to selling them for a higher price. Nobody was really appreciating the fact that you were actually owning your own digital asset. People were just appreciating the fact that prices were going to go higher. So, I mean, my dream for crypto is that we will have some sort of growing adoption despite to what's happening to the side of crypto which is related to traders and investors. Because, I mean, we don't need Bitcoin to be worth 100K to be adopted. I mean, even if it's worth $1, we just send more of it as opposed to sending a fraction of it. Same with the price of any other asset. So it saddens me that we see people leave and being incredibly disappointed when stuff like this happen, because you can continue to build regardless of what's happening with exchanges being solvent or not. And again, I don't really know what's going to be the solution on how we're going to try and kind of fix this. But I do hope that the people that are very passionate of this industry, that they do see decentralization as the future, kind of distancing ourselves from these big central industries, that they will stay here and continue building regardless. I mean, something that we kind of mentioned before is the fact that in 2018, at least 99% of the projects that died actually disappeared. So that helped to clean up the space a little bit. And now, as projects have been raising in dollars and stable coins as opposed to Ethereum, I mean, you have so many scams that have like 6 or 7 figures in the treasury, and their goal is to kind of, let's stay here as long as we can pay salaries, which is probably going to be a few years. So they're going to stay. I don't know. I mean, it's a huge fuck up the way that the industry is perceived right now, and the way that the people that are in the industry themselves building kind of get demotivated based on the price and the valuation of the industry itself. Don't know what's the answer to that.
Yeah.
Honestly,
you go
ahead.
No,
Okay.
you go.
All right. So I'd like to maybe present a standpoint of how we see it as just infra builders. So, what got me personally into this industry is like this very exciting, crossroads of politics, sociology, deep technology, and sort of the interconnectivity of it all. And what I believe keeps our tech team, for instance, the entire R&D department, and my co-founders, and the literally like one of the smartest people I've had the opportunity to meet in the industry, is like their problems don't really change. They still need to solve those very same problems that they faced, 3 years ago, 2 years ago. And if they solve them, they move on to a different one. Say, you need to somehow alleviate the scalability issues. So you work on that. And once you've made progress, you move on to zero knowledge or NPC. So, and this doesn't have anything to do with the market, fortunately. It doesn't have much to do with the candles going green or red, or red or green if you're in China. But what I'm just saying is that the challenges and the problems that are sort of being faced from the mathematics and cryptography side are still as challenging as they were. You've got the best universities in the world researching this technology. That didn't change as well. In fact, it grew, like on the academia side. So, if you take a look at, say, machine learning, which let's say it's a subset of AI, blockchain and cryptography are basically on the same level as far as, at least that's, I'm repeating what somebody else said, but that's on the same level when it comes to the interest of ambitious academics and the problems that are prevalent in both of those fields. So that gives me comfort as sort of one of the guys trying to build something that we're not going to lose deep tech talent. We're not going to use people who want to solve those very infrastructure problems and protocol-based problems. Like VC funding, we've probably all heard that it's now shifting towards AI, but Aztec just closed announced that it closed $100 million funding round yesterday. I think it was probably raised a bit sooner, but good products and actual solutions will do fine, like regardless of the market circumstances.
Yeah. One thing to follow up, I think, again, every time I come back to this question about what really went wrong, and again, how are we going to be able to get out of it? I think, it comes back to fundamentally going back to the base layer. I mean, again, as Antoni is doing, for example, with Aleph Zero, I think, to be honest, this is where there's that really opportune moment where we even look at whether or not Ethereum is going to be able to maintain that spot. Because I can give an example, we built a crypto wallet on top of the Ethereum network, and to do some things that really help curb that user experience. So Antoni mentioned earlier, for example, Guardians, which is basically a mechanism where I could have U3 as my recoverers, and I don't need a seed phrase. Something like that is incredibly beneficial for user experience. So that's, again, back to self-custody, right? That's what we want in the end. We've got the DeFi services to do swaps between a lot of coins. We can make that happen, but the seed phrase is a huge barrier for a lot of people. Guardians is a solution to that. On top of that as well, being able to have easier on-ramps and being able to provide those on-ramps for KYC and KYB, so more applications can be built in a decentralized and permissionless way. That would be very exciting. But the problem is right now that doing that on Ethereum, I can say when we implemented that Guardian technology, which was really pioneered by Argent and Dharma, it's incredibly difficult. And the entire experience of building applications on Ethereum right now, it's one of the better experiences versus sometimes having to deal on Solana or building in other non-EVM compatible ecosystems. It's been pretty bad elsewhere as well. But I think we need to really sit down and talk to developers, from startup founders to engineers, and asking them hey man, really, what you guys have tried to build something. What's the biggest difficulty you've had? Because I think this, Antoni, from working with the team at Aleph Zero, if you don't talk to the engineers about what problems they're facing or ask them what friction points they're hitting, then the engineers will usually just kind of mold into the framework that they have best available to them. And they'll do as best as they can at building it. I think that's what blockchain developers have been going through for the last few years. I mean, it's not saying that it's been a total pain for them overall, but I have to say, if you're trying to build a revolutionary financial product and you're using a system and a language framework that's been built back over the last 6-7 years, then you have to consider all of the exploits that can happen, all of the game theory that can be applied, all of the, even for example, just again, using MetaMask as an example, when I go and sign a transaction on MetaMask, interacting with a contract, I don't know if it's the real Uniswap, and I don't even get a printout of what I'm doing on my transaction. Imagine going to a bank and you think you're coming in for a mortgage or a loan, but you could be signing something completely different. So I think there are these it's really inexcusable stuff. I remember back in 2021, I had my kind of my peak frustration with this when people are oh yeah, the future is going to be multi-chain and you're just going to bridge between Avalanche and you're going to send funds over to Solana and then some funds over to Optimism, and it's just going to be so great and you're going to get airdrop tokens. And I'm that doesn't sound like decentralized finance to me. It sounds like a complete scam. It's not an experience for the general public. So, I'm sorry I sound a bit heated about it, but it's I think we're kind of kidding ourselves if we think that that's going to be okay for that. If we really want to get it, we always say, to get it to our grandma to use it, or our parents, that's just a terrible experience.
I don't want to do that even. That sounds just hearing about it.
I'll be honest, I really to be completely candid, and I talked about it on the channel before, I didn't bridge to Binance Smart Chain because for the first couple weeks when it came out, I was how do you do it? How do you go about doing this? And I didn't even understand, is it EVM compatible or whatever? And it took time for me to realize, you have to go into MetaMask and add this RPC link and this chain ID. And I'm sitting there thinking dude, okay, fine. This is it's fine and good. As we were talking about, Teddy, there's a huge element here for traders and investors, I think. But I think if we're really talking about building those applications that are going to change the world, getting back to the banking the unbanked and, building decentralized exchange infrastructure that's going to disrupt the New York Stock Exchange and really disrupt traditional markets and tap into that traditional asset class of real estate and equities. And also a new asset class of digital assets that can serve as competing currencies or collateral or assets to hedge against the traditional system. The only way we can do that and bring in that next wave of the audience is if we come to the regulator saying, here's why you don't have to trust us anymore, because self-custody is priority and the user experience has guardrails from the get-go. And is going to help people to be able to actually interact with cryptocurrencies in productive ways that they wouldn't be able to get this kind of value and rapid pace of innovation in traditional financial systems like Swift. So that's my kind of take on it. It's a bit of a harsh one, but I think it's like, this is the time to do it. Like, I mean, we've got, as you said, Alex, like if we don't ask it soon, a lot of great talent's going to leave. There's so many kind people I've met in this industry. And I know that a lot of them, like yourself and all of you guys here, you'll stay here. Like you want to see it thrive, but I think but
I do. It's too late to leave. Like, yeah, we laugh, you know, but on one hand, like I want to reiterate that I do understand those people that have been here for, 5, 8, 9 years or what have you. And they're just like, oh my God, this BS again, like I think it's a very valid feeling to have, especially now. Like we started this topic right now of basically talking about the state of layer ones. And, there's actually a question in our chat, which I also just discovered that we have a chat. And, they asked if we have any opinions about smart contracts, written in Move. So we can talk about that in a second. But I kind of want to take a step back and talk about how we got here in terms of L1s, because I do think that the L1 landscape is, first of all, it's ever changing, right? And one thing that when I was listening to you guys talk about chains just a second ago, one thing that I realized is we really hyped up decentralization over the last few years. And I don't want to say hyped up. Like, obviously it's very important, but I think we talked decentralization like it was like this unicorn, and nothing was ever decentralized enough. Like, Ethereum's not decentralized enough. Like you hear people talk about this, especially Bitcoin maximalists. And then you have a lot of the Ethereum crowd saying like, oh, but Bitcoin isn't, decentralized enough either because, 70 or 80% of the hash rate is generated in, this one province in China, or now it's different. But, that's the debate over the last few years. That's basically what it looked like. And my question right now is, are we in this state where we're kind of realizing that nothing will ever be as decentralized as, maybe some kind of maximalist or especially other chain maximalists would like it to be, but we've been looking at it wrong. Maybe it's just decentralized enough is what the goal should be while being friendly and accessible to users. Maybe this is the route we should be going and not just trying to achieve, how bodybuilders have body dysmorphia? Right? And you have this guy that is basically like one giant mountain of muscle, but he looks in the mirror and he sees a twig. That's basically what body dysmorphia is. Like I'm starting to think that's basically what decentralization is. Like, even when we achieve this unicorn status, it's like, oh, it's still not good enough, Yeah.
We're definitely prioritizing the wrong things. Like I always kind of get a bit of a laugh when like I see, oh, the Bitcoin mining hash rate has reached new all-time highs, and it's like, and that benefits people doing transactions. How? And it benefits people but people in Uganda are running their own nodes, and it's like, and how does that benefit someone in Uganda who's like living on a fraction of the salary of like the developing world? Like,
because if there's a nuclear war, Nick, we still have access to the Bitcoin
to our
ledger.
Bitcoin. Thank God. We don't have to trust those like Etherscans and blockchain.com explorers, because they've totally lied to us all the time, and they're always trying to manipulate us and double spend. And it's like, It's a lot of this, like, you're exactly right. It's like all this game theory talk, and like, oh, like, I want to everyone should run their own node. Everyone will use Lightning. And like, I think this is the kind of like, the trap we've fallen into. We've become our worst own enemy to a degree in this industry. We've allowed kind of like toxic narratives to kind of take over in that sense. And I think, again, like, I don't want to speak on behalf of everyone. There's a lot of great people in this space, but I think the really bright ones that are going to save this industry are really the ones talking to users like any other kind of startup or company would do, and talking to developers, talking to users, and asking them, hey, what are the friction points? Like, what's keeping you from getting to the next point on what you wanted to build? And I think, again, that gets back to where, like, on this topic of, I think, layer ones, there's a swath of layer ones that are not just focused so much on consensus. That's definitely one thing. And that was a discussion point. Consensus and scalability was a big focus in 2020 and 2021. But I think it's going to be about how do you reimagine the user experience, and how do you make it easier for developers? How do you make it so that we can build applications that weren't available before? How are you going to bring all those companies in? I mean, all of the enterprise utilization of blockchain in a lot of ways, most of them end up being proof of concepts. I worked with a project as an advisor for a project called Unibright, and they were actually one of the more serious projects about working with enterprises, easing the deployment of smart contract development, STOs, all kinds of different things. And they always found that when they were working through these companies who wanted to deploy smart contracts, they were stopped because, and they always had to keep it at the proof of concept phase because, oh, Ethereum isn't GDPR compliant. Sorry. Like, really, like, simple things like that can cause ripple effects that stagnate the growth of broader adoption in crypto and get us to a point where crypto isn't just this speculative market that is based off, as exactly as Teddy mentioned earlier, like NFTs and whether or not the price is going up on it. I remember what you were saying earlier, Teddy, hit me was like, when I was building this like DeFi wallet and there was some traction behind it, there was real utility, people could earn yield and swap assets. And then NFTs just came out of nowhere and you couldn't raise as much capital as before. Everyone had their attention on NFTs and weren't interested in DeFi at the time. And it's like, if we live in that kind of industry, it's just going to continue to cause the same issues. So,
I think that the only way to fix that is a real adoption. I mean, if people really do use these assets to exchange value peer to peer, and they use them because they're easy to use, it becomes absolutely irrelevant the value that these assets have. And I mean, yes, maybe the answer to this is to not, as Alex mentioned, maybe it's to kind of be decentralized-ish, to kind of have, if that's what makes it a lot easier in terms of recovering your keys instead of finding of just using these services on a day-to-day basis. I mean, that's probably what's going to go and fix it. But as long as we focus so much on prices and not really on the real adoption and what this technology can do for the industry or for just people on a day-to-day basis, we're going to be stuck here for pretty much forever. Because, I mean, we can't deny how great crypto is to use in terms of DeFi. I mean, I do most of my transactions with stable coins. I mean, I only use my fiat currencies to pay for rent, utilities, and taxes. I mean, I deal with cryptocurrencies on a nearly day-to-day basis. It's a fantastic way of exchanging value.
And this is not only when buying weapons from Russia, right? Which is something you also do with stable coins, like you told me.
Well, I mean, I guess that you surround yourself with people that have common interests, and most of the people that I surround myself with are into crypto. And whenever we do have, I mean, my brother-in-law, I mean, he bought a windsurf, and I paid him back with crypto. It takes a few minutes. The fees are super cheap. Nobody has to know about it. He just gives me his long little code. I copy paste it on my wallet and send him the money. I mean, it's a fantastic way of exchanging value. I mean, it's no secret that I've joined this industry for the money, as most people probably did in 2016 and 2017, and I've stayed here for all these years because I just genuinely love the tech, and I'm very, very, very excited to the potential that it has. But as long as these apps are so hard and complicated to use, we're always going to be stuck here between a bunch of nerds and people that want to try it, and that is too complicated for them to use it. I mean, I can imagine my mom going on Coinbase and buying $50 worth of Bitcoin, but I will never imagine her finding ways of using it on a day-to-day basis.
YOLOing into like governance proposals on Compound or whatever.
Like, I mean, most people are never going to use DAOs if they are the way that they are today. I mean, it's again, like my mom wouldn't be able in a million years to vote on a DAO. But even forget the voting, like sending the money to a wallet from a centralized exchange to then use those funds to vote. I mean, it's, again, I guess that every single technology at any given point started with an incredibly niche community of enthusiasts, and then frustration kind of led to finding solutions to bring it to the greater audience. And I mean, if you think about it, we are still really, really early. I mean, it kind of went viral in 2017, and it went a step higher in 2020. So it's still a long time to go. I mean, we're probably complaining of things that are going to seem silly in a few years. Where it's
I just have PTSD when I hear we're still early.
No, I mean,
no, you're right. Like, this is my personal thing, is like whenever I hear from like all the NFT craze, like when I hear, we're doing this for the culture or we're still early, like I kind of get like this, little shock in my system.
But like,
but you're absolutely right. If you go
in a restaurant and you ask everybody, like, raise your hand if you know what Bitcoin is, probably everybody will raise their hand. If you say like, okay, now that you know what Bitcoin is, raise your hand if you have some Bitcoin. I'd say that probably 10% of people will raise their hand, if they even do. And if you ask those people, have you ever actually used it more than 5 times to exchange value? I'd probably say that most people have never really sent Bitcoin.
You'd be lucky if you had one in the restaurant, right?
Yeah, so it's exactly. So it's, I mean, again, I hate saying we're still early, but we are really early relative to how long this industry will continue to kind of go for the, I mean, unless Binance exits Camp and Coinbase as well. So at that point, we're going to be stuck with cash or government-issued digital currencies. But I am very, very optimistic. I mean, I love to complain about it.
You got the office dog, Anthony.
Yep, correct.
But it was mine, because my dog somewhere.
No, that's mine, or well, ours, I guess.
And now it's time for the dog and cat break. So anyone who has their pet dogs and cats, bring them on the screen. I think the mood is so shot. We've been talking about all like the lessons from 2022.
But Teddy, honestly, I agree, and I totally understand where you're going with this, because, for instance, and this ties into the decentralization discussion, because like we tell people that if they want to make sure that the smart contract they're interacting with is secure, that, just read the code. And most people won't be able to do that. And then we're talking about DAOs and whether our moms and dads and grandmas would be able to participate in the process. Like, I don't think we need them to. Like, it would be cool, but sometimes I'm just more inclined to think this will be a generational change, instead of just trying to adapt a portion of those tools to everyone. Like, obviously the UX on the simple things should be way better and sufficiently decentralized. But then again, we talked about bridges. Okay, so like we've got guardians, like that's useful and convenient, but not decentralized. So yeah, striking like the right balance is going to be the key, definitely. And I think I need to check up on that dog, honestly, because something's going off.
Totally a pervert in the building. Yeah. No, but I mean, it's funny you mentioned to read the code. And I mean, I must have signed and agreed to thousands of terms and conditions, and I've never read a single one of them. So God forbid me reading a code, and God forbid the average person even daring to kind of read 2 lines of code. I mean, I've tried to learn how to code and I give up after 6 days because it was probably one of the most challenging things that I've ever done. I'm clearly not smart enough to approach that. So God forbid trying to look at it and trying to understand I know that you're joking, but trying to understand if that code is legit or not. I guess that we just have to dumb it down as much as possible for the people that are probably going to deal with those kind of contracts. But I don't know.
Yeah.
So maybe like when it comes to L1s, like in all honesty, it sounds, if I could just get one conclusion out of this, from this discussion, is like it really feels like the L1 that's really going to take the largest strides to be user friendly and protect its users from scams and be inviting and maybe not just putting everything on this card of like, we're the most decentralized ever possible. Cause I kind of do want to answer this question about the move programming language and just to add my 2 cents. Like, I don't think we've seen enough from either Sui or Aptos to make any judgment right now and to have a verdict on this. It has to stand the test of time. Like like Teddy and Nick, I bet you guys remember Lisk, right? From back in the day. And Lisk was supposed, I don't know what they're doing now. I hope they're doing okay, but I haven't heard of what Lisk is doing in a really long time. And Lisk was supposed to be a game changer because everybody was bitching about Solidity and how hard it is to find Solidity devs back in 2016, 2017. And Solidity is such a horrible language to code in because you can break more things than you actually want to. When you're creating something, there's like 90 different ways to break it and one way to actually make it work, right? Yeah. And Lisk was supposed to be the blockchain that allows the millions of, or I forget, like it was on their website that, because it was written in JavaScript, I think. Yeah, in JavaScript. And there's millions of JavaScript, so that means that suddenly the world has millions of smart contract developers that can work on this chain. And it wasn't enough. Somewhere along the way, it just wasn't enough. Go ahead, Antoni.
It's also, we're kind of discussing two different target groups as well, because on one hand, you've got the developer experience, and on the other hand, you've got like the end product user experience. So like focusing on the dev experience, who knows? Like, honestly, people are, for instance, we have people in the team that like Solidity, and we have people in the team that hate Solidity. Rust, statistically has been probably the I think the second favorite, if I'm not mistaken, or the favorite language for 6 or 7 years running when it comes to developers. Move from, again, like I'm not coding, so I'm going to be paraphrasing. And from what I heard, it does look certainly interesting. But like, as you mentioned, we still have to wait a bit.
I just wanted to mention one small thing. Actually, Teddy, I don't know if you remember, we first met at the Lisk, I think it was like the Lisk office that they had in Utrecht in the Netherlands, which was, that's interesting you brought that up, Alex.
It's funny that you mentioned Lisk, exactly. I think there was, Nicholas was doing a Europe tour, world tour. He was just kind of traveling the world to meet cryptocurrency communities, and I've helped him host an event at the Lisk Blockchain Center. So it was... So,
yeah, man.
I was already spying on you guys back then. What can I say?
Alex is just like, following us down the road and stuff. Like, he's like, what's up? What's Nick up to? Like, what are Nick and Teddy meeting for? But no, I mean, I think honestly, like the developer experience is very huge. I mean, I mean, to be honest, like you were mentioning, Alex, like about the 90 ways to break something and having one way to make it work. If you talk to like Solidity engineers today, and their average like developer experience, the vast majority of the time, 80-90%, is not developing code, but auditing code. So if you take an application like Uniswap, which is thousands upon thousands of lines of code, just to be able to swap from one asset to another, that takes a lot of time as is to make sure that all works. But then you have to spend the other 90% of the time having auditing firms and agencies going out, as well as the engineers themselves, to go out and review that code and make sure it works. And that's why, like, for me, like, I know a lot of people are inclined to think that, exploits are sometimes insider jobs, or people are doing this, and they're the ones hacking it. Whether that's true or not, the entire developer experience for those who are genuine, who want to do good, is really difficult. If the auditing agencies in the space miss bugs, that alone tells us that, okay, the language itself is not ready. And that's again what's made me kind of like, I know ETH has performed quite well against Bitcoin since, the move to POS, for its consensus mechanism. I don't doubt maybe Ethereum can scale for sure, but that's one problem. I mean, that doesn't fix the ability to build much more exciting applications, and also to be building them in a much more safer and streamlined way. I think the biggest thing, again, as we've learned from FTX now, is not so much what applications are in crypto, but can you even trust them? And again, we see that we see DeFi works for sure, but with each and every bull market, there's massive upsets of hacks, exploits. Even right now, like, again, as we go back to that point earlier, there's no way for me to truly verify which contract I'm interacting with. And in MetaMask, the leading wallet, I can't see what I'm signing. Like, and again, this goes back to the point of reading the code. If the auditing agencies can't get it, the user's certainly not going to get it. So I think it comes back again. There is a huge opportunity for L1s to steal the stage here. If they can think about, as you mentioned, Alex, a user experience that's focused on inclusivity and not so much on this hardcore view of like, oh, we're never good, we're never decentralized enough.
Well, because ETH isn't decentralized now after moving to POS, right?
Yeah.
That's the argument. It's like you lost out on decentralization because you can only achieve decentralization with proof of work. So it's basically kaput.
Yeah. I think, and what's interesting, but to that point, like POS models, like even since Peercoin, I don't know if one time a POS network has been exploited. I don't want to say that it's never been the case, but I mean, as someone who's been talking about crypto since 2017, I don't know of one POS network. I think it was even, to be honest, while I'm not even a big fan of, like Charles Hoskinson brought this up, like people would always criticize Cardano for that, but it's like POS is as a consensus mechanism, and I think it's why Vitalik and the team moved towards it, is because POS as a network, the incentives are aligned on being a good actor and continuing to provide proper transactional data on the ledger. So I think that considering that in mind, it's all about incentive mechanisms. You can see Binance Smart Chain or Solana, which has anywhere from 12 to 24 validators. That's enough people you could fit into a room who have the authority and keys to determine whether or not transaction blocks get validated or not. And it works. So the problem for Binance Smart Chain wasn't its consensus or scalability or Polygon or any of these networks that do have very centralized counterparties who lead it. But really, as you mentioned, Alex, it's the hacks, it's the user experience. It's not going deeper into figuring out, hey, what did Ethereum really miss out on? Like, what did we not include 6 to 7 years ago that we need to build from scratch in a new entire experience for users and developers?
Nick, I'm going to pull out the 50% that you didn't mention when talking about exploits of POSs, and the other 50% which went unsaid, which is, and in proof of work, we did see exploits and double spends and production of, illegitimate blocks. We saw this with Ethereum Classic, right? Yeah. Which showcased that if you have a proof of work consensus algorithm blockchain, whose basically market cap is low enough, it's actually relatively easy to do. We saw, I think it even happened like twice or thrice with Ethereum Classic, if I'm not mistaken. Yeah. We saw it with Vertcoin. We saw it with Vertcoin, which was one of the darlings of the altcoin run in 2017. We saw it on a few of these proof of work chains, which is incredibly worrying.
Yeah. I mean, and to be honest, like I think again, by now it's either you're in one camp or the other. I love Bitcoin at the end of the day and stuff, but I definitely think maximalists who ignore the fact that there was at least, I think, 1 or 2 exploits where there was existing bugs within the Bitcoin code to print new Bitcoins. There was a reversal like back on the chain, similar to Ethereum. I think, for example, like if you talk to an entrepreneur, like, and you look at, for example, like, I don't know what you guys, maybe you have a different take, and I can respect that for sure, but like, when people actually literally will complain about how Ethereum rolled back the chain after the DAO hack, I always think to myself, it's like, okay, so like, let's say you're running a bank or something, and you're at a point so early on in your bank where someone has just robbed you of 60% of your funds, 20%, however much ETH it was at the time of the supply. And you're not saying that during the early days you wouldn't reverse back to continue forward on what you're building, just letting that one bug or that one exploit, it's all over. I think that people who think that way, they don't understand how software works. Ethereum was in its infancy. Like, if we don't have that ability to like correct itself and fix it, then Ethereum remains stagnant. That's not decentralized open source code. That's not improving a singular network. That's just building something and saying, oh, let's wish for the best, I mean, like, I think that's the one thing we have to understand here, exactly to the point you guys have brought up earlier about being early. If we are here early, we have to have some degree of ability to be able to change these networks rapidly and be able to implement changes to a degree. And when we make mistakes, be able to recoup against those and be able to build back better in some degree. Because if we
Build
just
back better, Nick.
Oh no! That was not good. I did not mean to put it that way. But the major thing here, I sound like Charles Schwab or whatever, like from the World Economic Forum. But I mean, I think basically, if you leave it like it is now, I mean, man, like really, if Ethereum's developer experience is going to be like this for the next 2 or 3 years, yeah, I don't know. I'm trying to think of like that next wave of DeFi applications, like under collateralized loans, like being able to have like a real decentralized exchange where anyone in the world, once they go through the proper steps of setting up like a wallet, which is hopefully very simple, can access owning Tesla shares or US dollars. I believe in that permissionless future, or at least
Gary Gensler is having a fit right now, Nick.
Yeah, he's not liking that, right? Like, I think that's the middle ground we need to go for, because we've obviously seen what a completely permissionless environment looks like, and there are, I think the harsh way to put it is there are market exploits. I remember I was talking once actually to Hester Pierce when I was at Consensus in 2019. It was deep bear market, and I was really happy to like just see her walking around, and chatting with her. And I actually was making the argument to have like a little more regulation. She's actually very libertarian and kind of has that viewpoint of like, why do you think we need regulation? The one that I mentioned to her is like, well, there's wash trading for one. I mean, like in the NFT space, that happens a lot. I mean, I don't think people want to talk about it, but it happens to a degree. It happens in altcoins. Exchanges doing that in equities would get arrested. But that happens in the cryptocurrency space on a normal basis. Is that something we can just tolerate, like to have artificial volume? I don't think we should. Like, I think along with that as well, there, as you talked about, Alex, like there was a really interesting thread I saw on Twitter. I wish I could give credit where it's due, but I don't remember his name. But I remember I just saw like a Twitter thread where this guy just went down the list of all the different types of rug pulls, like all the different means of how you can trick someone and basically pull the rug and walk away with all the money. And I'm thinking to myself, like, you can build the best ledger, you can build all these systems, but if you don't have guardrails, someone's going to find a way to implement those in a market with tokens and liquidity. And that's the stuff that just kills crypto, because once someone gets rugged like that, they're gone from crypto forever. And anyone who's trying to build genuine applications who maybe didn't have their attention at the start, there's no way they're getting it, So that's, I don't know. I like I said, didn't mean to sound like the WEF and stuff. I don't think crypto needs to be some permission bubble for sure, but I think that there are applications that could be improved in a decentralized format if they're able to, for example, have a KYC guardrail. So we don't have to have our funds with Sam Bankman-Fried, right? I would love to have a self-custodial wallet, but I need to have something that's going to give me the same kind of convenience and liquidity. And I think, anyways.
Yeah. That's one thing is like if something like Binance would go down, right? Obviously there's like, that would be the black swans above black swans, but it's not going to happen. Like that's, I was actually talking with my parents about this very recently I think my dad asked me today, he was like, oh, did you hear about Binance? Like, yeah, but like, I'm not buying it because, what I told him is how many people warned us about FTX before it went down? Like zero, right? Like no one was running around Twitter screaming like, "Oh my God, did FTX publish their proof of reserves?" It's like, no, why? And it's like no one saw this coming. And just talking about the Binance stuff, it's like like the regulatory aspect of it, like that's been ongoing for some time. But like I just feel like it's people, just trying to be the next, basically trying to profit, like quote unquote profit on Twitter, like from a social currency kind of perspective. But like if they go down, then I'm right. Then like my account's gonna pop off. But and if I'm wrong, then whatever. Everyone's gonna forget in a week. But basically, what I'm getting at is like if Binance would go down, like the problem is not even like the trust or anything like that. Like I see Binance as this exchange, like Coinbase, Binance. Those are kind of the places that if you're a total noob, that's where you go. That's your onboarding experience, is these 2, 3, 4 major centralized exchanges that have been on the market for 5+ years and up to this point have been relatively safe, right? Like I know there's been hacks on Binance, but Binance has been they have made everybody whole from what I remember, from what I was able to tell. Coinbase, I don't think. Yeah, exactly. Coinbase, I don't think has ever been hacked, and if they were, I think it would have come out around the IPO. Like if anything went down that we don't know about. But there's a lot of these players that I see as incredibly important, and I was actually when I was thinking about this conversation that we were going to have, I was thinking about this. What can we see in the future? And I was thinking about the amount of issues that would arise if we asked newcomers to basically use a decentralized exchange the way that they're using centralized exchanges right now, right? Like it's a very comforting experience to know that everything that you want to have access to is behind an email and a password, right?
Yeah. But isn't it as simple as building a decentralized exchange with a interface that is one-to-one as a centralized one, if we're just talking about user experience to onboard people?
So like order book based ones.
Yeah. If you're asking me, yes, but
yeah.
Yeah. I mean, to be honest, I think there are some wallets that to some degree, like even I remember way back Binance, before Binance Smart Chain, Binance was kind of ahead of the curve on this, where they realized that DEXs were kind of here to stay, and they took their first dip into trying to build some exchange like it. I think it's going to be difficult you have to make one that's so convenient rather than, I know, and security is priority number one, I think, on a fundamental basis, but to really convince people, I think it needs to be even more convenient than traditional centralized exchanges. And I think take advantage of what Teddy was talking about earlier, like about some of the things we do know crypto does well, like transactions and payments. Like being able to just send like $100 to a friend and not need permission for that. I think it's going to be something that will be an application that won't even feel like a DEX or a self-custodial wallet. And again, is going to use some of those things like Antoni was mentioning, like guardians or some kind of social recovery, where again, you're not dealing with a seed phrase. That's the biggest UX hurdle, is the moment when you already are using a web extension like MetaMask or a mobile wallet, which is very clearly labeling itself as a crypto wallet. And the first thing they give you is 12 to 24 words that if you do not write it down and you lose it, you lose all your money. And even that whole experience as well of having like one public private key pair that defines you as an individual on the web is kind of a poor user experience. It's not like a login with a username and password that people are familiar with. So it's just overall, I think again, there's a lot of room for that to potentially change in this cycle. Some people may still want to keep it that way, and I don't think there's anything wrong with having that option. But I mean, getting back to this point, exactly as Teddy said, you need to be able to build something that is going to be completely intransparent or different from a centralized exchange. It needs to be incredibly smooth, have traditional order book functionality, and basically make it feel like you're not even having to custody your own assets. It should be nothing more than an email recovery and a couple of contacts in your network basically saying that, yes, this authenticated recovery is good to go, right? And that's where social recovery comes in. You can, Antoni hit on a very interesting point, which is I think we can fix this issue of another SBF FTX situation if you meet somewhere in between centralization and decentralization. So if you have social recovery, you can not just have it where you have, like, let's say, for example, Alex, like for my funds with social recovery, I could have you as a guardian. I could just have literally one guardian. Maybe I have my dad as a guardian or someone else. And you could program it in a way where for your third guardian, you have a centralized provider here. This could literally be Coinbase. It could be Binance. It could be a company that you and I start, right? And generally speaking, within that social recovery system, so long as you or my dad or one person signs that, hey, this recovery is good to go, and within my phone, I'm able to send an email verification code of 6 or 8 digits to that centralized provider, then in that case, I can recover my account. It is the same exact, like, in the sense people would say maybe in that example, if you're relying on the centralized provider, if they go down as a company, it's the same exact risk as having your money in a centralized exchange. But what's nice about this is that you're not having to trust them with the original custody of those funds. And you could have it in a way where, again, there's other fail-safes built in. Where this whole thing of social recovery has been talked about for a while. Arjun and other players have continued to build on it. And I really think this is one of the big things we focused on in Digifox. Like, I think this is going to be the future of wallets. Maybe not on Ethereum, but the idea of like using relayers for recovery, being able to use relayers to do meta transactions, where if I wanted to send money to like Teddy, for example, like 100 USDC, I'm not going to need ETH to do that transaction. The application or the wallet will pay for that, and they'll charge me a fee in the currency that I'm using to send like USDC. There's a lot of like UX hurdles like that can be overcome with just a few improvements, and it makes the experience so much better to where, again, as Teddy was mentioning, when you finally get used to it, you're like, oh, this is better than CeFi. So that's some of the stuff that comes to mind immediately. But
I mean, at this stage, after 2022, I feel like being better than CeFi is setting the bar incredibly low. Low,
right? It's not too difficult. We just got to get people.
Yeah, it's better than this thing that made me lose all of my money, right? It's like if we look at it just from a 2022 perspective. Yeah, just like, so if you only lose 99%, you're still doing better than most of CeFi is doing right now.
It's terrible.
Sorry,
you're so right.
That's the dark side of me. It's
so sadly true.
It's the cold Polish winter speaking through me. There's one thing I want to talk to you guys. I know that you guys are very busy, and I'm going to let you run. But one thing that we discussed before we jumped on this call is we kind of touched upon it in layer ones. But basically, Teddy, I definitely want to hear your thoughts on this. First off is we talked about DeFi Summer, and we talked about Ponzinomics, which is, I even heard some VCs use the term Ponzinomics as good, right? As like, hey, how good are your Ponzinomics, which is kind of hilarious. And recently, with a lot of the market meltdown, we have switched the focus as an industry. We have switched the focus to talk about real yield, which is basically things that are sustainable long term, because guess what? Apparently 2,000% APY is not sustainable. And I don't think anybody in this community got the memo until recently. So when we're looking at, because you said it very well at the beginning of this live stream, where people are most interested when number go up, right? So when switching from real yield to real yield from, on this, a lot of the Ponzi nature of some of these token designs, like, is that going to be sexy enough for people to think of it as it basically being worthwhile?
In my opinion, very simply not. Why? I mean, I've got friends in crypto that have been in crypto with me for the past 5-6 years that know crypto inside out, and they just don't see the risk of putting a lot of their savings on a website that will only give you 1% return after a year. Of course, I mean, if somebody gives you 20%, it's like, okay, I might just get a little chunk of my net worth, put it here, and take it out before everything collapses. Because, I mean, it's, again, nothing on the long term is sustainable with a 15-20% API, unless you're running a Ponzi. So when you're actually looking at real numbers that are sustainable for the long term, probably not. They're not going to be interesting to the average retail users, because, I mean, if you put in $100 and you're risking your entire net worth of $100 just to earn one at the end of the year, it's not worth it. But if you are looking at, let's call them whales, people that have maybe portfolios of 50 million or 100 million, and you can actually get that 1% for doing nothing in a very safe and organic, decentralized way. Yeah, I mean, I can see it becoming a lot more interesting for bigger parties as opposed to the average day-to-day user. But I think that users will just focus on a different side of DeFi, which can just very simply be exchanging value peer-to-peer, very cheap, very quick, and ideally with a degree of privacy as well. Which is why, I mean, I'm so interested in Aleph Zero, because it kind of covers all of these aspects.
If you like ZKs, then have you met Antoni?
Yeah. Well, I mean, as I said, this is why I'm so interested in it.
Yeah.
I wanted to say one thing, Teddy, that you hit on, which I noticed that like CeFi platforms, like I think even Celsius and BlockFi would do this. Did you ever notice how like they would say we could pay like 7% APY on BTC or 5% APY, and you'd see after a certain threshold of Bitcoin, like say after like 0.1 BTC or maybe like 0.25, then the yield drops to like 1 or 2%. And I think to me that's a very interesting way where, again, I mean, there's probably game ways in DeFi people would gamify it and find ways to abuse it. But I always thought that was a really interesting mechanism where the little guy was able to at least get a better yield off of their funds versus like for a whale in this case, they know that they're not going to get this kind of same high APYs, but they'd still be able to earn it in a sustainable way to some degree. And the thing I'd bring up, like one thing I have a pretty strong opinion on around like Celsius and these platforms. The really sad thing about it is that Celsius's original business model, if we just look at it for what it originally was meant to be and what users thought their funds were being used for, which was a borrower, essentially, people depositing money on the platform, and a borrower putting up, say, $100 of collateral to borrow $50, right? A 2-to-1 collateral to loan ratio. That original model and the ability to liquidate those funds if the value drops below the loan value to protect the depositor, that model actually worked perfectly fine.
Yeah.
The issue that Celsius ran into was, the fact that they started putting money elsewhere. So I always I try to bring that up for the point that if you can do these in decentralized ways and also have those same gamified ways of attracting people, the general public, to use something like that with the actual protective guards in place, that's pretty much what Compound does. Compound and Aave are still working fine. They're Celsius de facto decentralized, right? There's no trust as to whether or not liquidation is going to happen. It's going to happen, and it's going to protect the depositors at all costs. So I think that I think there's a lot we can learn from those companies on what ways they were able to expand their business on a marketing side and a user growth side, but making sure that you do it in a decentralized way where there are no empty holes, like you mentioned with like Luna with UST and Anchor protocol, where did the 30% yield come from? So yeah, things like that. Again, it's finding, I think, striking a middle point that will be very important. But
Antoni, before I think I cut you off, I don't know if because you said something, you nodded when Teddy was saying privacy. I just didn't know if you wanted to add something there. If not, it's cool because I do have a question.
I just nodded.
Okay.
I just nodded. I can expand, but nodding.
You can expand the nod. Okay. So I'm gonna let you guys run in a sec because first of all, thank you for being here with me on a Friday night. You nerds. But I really do appreciate it. So kind of to start wrapping things up, we talked about everything that went wrong. We talked about the things that we can improve on, but what would you maybe like to see going into 2023? Apart from return of the bull run or whatever, but maybe some things to keep in mind going into next year, some things that you'd like to see built apart from the wallets, the very sophisticated wallets that we were discussing on this show. But basically, what's the mentality you're entering 2023 with?
Well, first of all, I'm just going to answer quickly. I really do hope that we're going to see people joining the space for the use case and less for the investor's perspective. We're seeing now slowly and surely a lot of government-issued digital currencies. We all think that they're awesome, but I'm sure that if there's something that we're going to give up on those, it's privacy. I saw a statement from the Chinese digital currency where people are essentially they only can spend but they can't save because I think that
it has an expiry date.
It has an expiry date. So I think that people will hopefully realize that there is a big issue with being so centralized that it's worth exploring holding an asset which gives you the freedom of interacting with different peers regardless of what the governments are saying, what allowing you to do or not to do. As a consequence of this, I'm hoping to see people kind of shifting away from centralized exchanges for storing funds and kind of moving those funds elsewhere. You don't like a decentralized exchange, it's fine. You log in with your ledger, send your money to Binance, to Coinbase, whatever your exchange of choice is, buy that asset and move it out. So I really want to see, ideally, people get comfortable with being their own bank. it's easier than said, but at the end of the day, it's actually not that difficult. I really do hope to start seeing volume grow a lot on decentralized exchanges, whether it's simply as swapping funds like on Uniswap, or it's with a more trading focused UI like DXDY, DYDX.
Yeah.
Confused about it.
DYDX, yeah.
When you're trading on that exchange, it just looks like a normal derivatives exchange. It's great. So I'm hoping to see. I mean, this is not a show for the exchange, but this is just a show for the movement. I'm just hoping to see people kind of moving to trade towards those platforms. Ideally, I mean, as Nicholas was saying, that it wouldn't be bad to see some regulations jumped in the space that are there to protect users, as long as it doesn't really go and mess up the whole kind of decentralized and freedom that users can have to interact with these assets. And well, I mean, to keep it short, it's just to people to kind of just be a little bit more responsible with their own funds, a little bit more protective, as opposed to just trusting these big entities that you blindly trust. I mean, I blindly trusted FTX, as I mentioned to you guys before we went live. I mean, I would have thought you were crazy to say that FTX was insolvent. I mean, they've done such a great job with PR. I mean, every single big celebrity was talking about FTX. You had these stadiums that are as bigger than my hometown that were named after FTX. And they will.
And now we know how we paid for it.
No, exactly. So I mean, it's like, stop trusting these people just because you're told to trust them. Just ignore that. Get your funds and store them away. Otherwise, just use banks. I mean, it's why the reason I love crypto so much is because I own my money. I can own it and spend it whenever I want, and I just need a little USB stick and MetaMask to kind of interact with it easily. So. Yeah, it's just kind of people moving a little bit far away from these big, nasty, evil, centralized institutions.
I think you're onto something though, Ted, because like I've seen, like we even work with like some like hardware wallets on the channel, and the traffic that they've started to see over the past few months has been massive. So I'm hoping that, again, as you were mentioning, Alex, like that we don't lose too many people, and instead people kind of take it as like a learning lesson. As usually the saying goes, you got to go through one bear market like to really like experience and know about crypto. And hopefully, as you said, Teddy, like we're going to have even more solutions that'll make it easier to do that self-custody.
I just hope it's not this moment where, like with COVID, when we went into lockdowns and everybody bought all the toilet paper. I just hope this isn't like that kind of moment, and then everything just kind of returns to status quo, and it's like, but like FTX, that was 2 years ago, so I don't need my hardware wallet anymore. Like, that's the only thing I wanted to add. I hope it's not one of those.
Yeah, no, that's true. Yeah, making it sticky and like making it people actually change their habits and define it to such a degree that when you introduce someone to the space, you don't think about ever introing them to a centralized provider, because the decentralized experience should be that much better.
But I mean, just to kind of throw it there about what Alex was saying, that it's just a temporary thing. Something that I don't believe the Binance FUD. I think that the Binance FUD is. I thought FTX was solvent, but I'm confident that Binance is solvent. But what kind of worries me is that whenever you look at the comments of people protecting Binance, there's so much in denial. It's like, how about you just go on Binance and pick some of your funds out just in case? I know you love CZ. I know you love Binance. I know you love. I know you're aware of how much money they have. FTX was the same 4 weeks ago. It's like, stop like protecting it on social media. Yes, protect it if you have reasons to, but it's like, still get those funds and move them out. I mean, it's like, it's always better safe than sorry. I mean, I'm always a little bit of an extreme with this when it comes to trading, or just generally speaking with regards to like safety of funds. I'm a risk management freak. Like, for me, like it's always about protecting rather than growing. So even when it comes to trading, like I have very tight invalidation points. It's just like my goal is to protect capital before growing it. And one way to protect your capital is how about you remove it from your trading exchange that has some FUD, real or not, it doesn't matter. Move it out. It gets fixed. New reports come out that make it clear that it's safe to use. Move them back there if you're so afraid of using a USB stick. But the mentality was 2 weeks ago on Twitter was, you're an absolute idiot if you're keeping your money in a centralized exchange. And now people are kind of protecting Binance for the same exact topic. So it's,
Yeah.
I mean, what I said before is that I hope to see people shifting completely to decentralized way of storing funds or exchanging cryptocurrencies. I think it might take a little bit longer than expected, and probably, yes, one of the main hurdles is just user experience.
But on the other hand, we have people on Twitter that just want to see the world burn, and they're throwing FUD at, like you can go crazy. It's like, what's it called? It's like suffering from paralysis by analysis, right? Like you're on Twitter, you're just looking like, oh my God, there's FUD on this exchange, on this exchange, and this exchange. And it's like, you can just get in this perpetual state of pulling money out of exchanges and putting it in cold storage and then back on exchanges. But I agree with you, Teddy. I'm just poking fun at Twitter as usual.
100%. Well, and I think that, unfortunately, like negativity in life, it's always louder than positivity. It's a lot easier to be heard if you're negative.
Especially in a bear market.
Especially in a bear market. So, you see a lot of these people that are posting these horrible statements about Binance for the sake of just generating engagement. Because if you just write anything negative about Binance, it will get 1,000 likes within a few minutes, as opposed to you saying something positive, because then the people call you irresponsible for protecting the exchange. So right now we are in this little chapter where I guess it's cool to be bearish and to spread misinformation that it's making people afraid.
And talk about CPI. Be bearish. Talk about CPI and.
the bear starter pack or something like now is very interested in macro
the CPI enjoyer.
The CPI enjoyer. The macro investor.
We're all macro investors now. This is what the market has done with us. Yeah.
The supply chain is going to be disrupted for many years.
Antoni, thoughts going into 2023, sir?
Zero knowledge, honestly. Like privacy and zero knowledge. I think these are going to be huge catalysts for better UX, like even on the verifiable credential side, and decentralized wallets. So we're looking into that heavily and with some interesting results. Then, I would love to see games that utilize blockchain that are actual games and that are fun and that are beautiful. And, somehow we forgot how to design stuff, and how to make it look visually appealing. Like what happened?
Or make it fun. Like a game that's fun. Like what a crazy thought.
Yeah. Like for some reason we just did a bunch of games that, all right. This is a topic that is particularly annoying, honestly, for me personally. But I'm gonna skip this one. But I'm pretty sure from what I'm seeing and hearing that the next wave of games that utilize blockchain, or at least I'm hoping that this is gonna happen, are gonna be games, like actual games. And so there's that, and then the entire metaverse thing. Does anyone know how to actually define it or what it is?
Yeah, I'm pretty sure it's Second Life. We already invented it 20 years ago.
So
one thing I wanted to say, Antoni, is like when you're talking about fun games, like I just realized that what we were calling play to earn for the last year and a half was actually suffer to earn.
Yeah,
it was like it looked horrible. There was no gameplay. Like you just had to click a button in order to get some token.
Yeah, it reminded me of those games that you play where literally there's like this really fun Flash or like web-based game, and they even had on mobile phones where you just click. And you basically start getting it's like a business. So you like start clicking and you get cookies or something. And then you get enough cookies and you can use that to buy like something that's going to accelerate or multiply the amount of cookies you get every time you click. And it's like exactly as you said, like it's play to suffer. Like none of these games are fun. None of them are AAA. And I think exactly, Antoni, I could sense, man, in your voice, like you must be a gamer at heart, because when you see the kind of play to earn games that came out, or the metaverse open world, like blockchain based tokenized games, so much of it empty promises, and the tech demos don't even look exciting. And I started seeing a lot of like VCs who were talking about, oh, this game looks so cool, and they've never played a game before. Like, that was the most frustrating thing.
In my past life,
a gamer, I just couldn't even play these games. I just looked.
Yeah.
First of all, it probably costed you a few $100 in Ethereum just to play this trash, because you continuously had to pay fees for a game that it wasn't even a game to begin with. The graphics, we basically went down back to 2002 in terms of like, we went back to like megapixels as big as your entire screen. And there was just no playability. And unfortunately, I mean, again, going back to it, it was the fact that they were entirely money focused. It was all about the earn. How about providing value with blockchain? I mean, as somebody who used to play with World of Warcraft, like, you don't have to earn money. Like the blockchain side of it could have jumped in having that, you know, you can hold the sword that you've did 20 dungeons to finally earn, and you can swap it with your characters and it's yours and nobody can take it off you. This is where I see blockchain providing value, as opposed to you playing for X amount of hours and earning X amount of dollars for it, of whatever the use case of blockchain jumped in. But yeah. I'm confident that we're going to move away from this, because we've clearly seen that these games are not being used by anybody. I mean, a lot of people were actually using them, I think, in India, because they were earning a ridiculous amount of money.
Yeah, there was a lot of traction with Axie Infinity in Philippines. Yeah.
Old school farming.
Yeah. But it comes down to token economics as well, right? If the token only exists to sell because you earn it by playing, you know, it's like, and
there's buyers who will prop up the value and take, that's all actually, really ended up being is, I think it was an interesting experiment, but it really ended up, I think, hurting a lot of people. Like, at the end of the day, I mean, if you think about it, there was probably, once it came to the time when there wasn't that buy side speculation around Axie and new players stopped coming in, then there's more sell side pressure. Exactly as you guys were talking about, like, it's the people who are farming or playing to earn that essentially are going to get knocked under the bus at the end of the day. And I actually had a close contact who was in the Philippines, and like, I could see that cycle of like how it was really exciting and everyone was really happy about it. And businesses were accepting SLP, which was like the secondary currency that you earned, as well as AXS. And then like that just stopped happening within a couple of months because it started going down, you know?
Surprise, surprise.
Yeah.
How do you define the metaverse, Antoni, before we go?
Like, seriously? Okay, so
no, it could be not seriously.
Yeah,
I can define it. I can define it if you want, or you can define it. I can define it my own.
No,
way.
I mean, I maybe I'm not gonna go into like a formal definition or anything like that. But I think that
no. You know, what's the metaverse to you?
What's the metaverse to me? It's the extension of like using different virtual tools or physical tools that enable you to enter the virtual world that expand sort of on what you're seeing here. Which, you know, if like we had a lot of discussions about this, and like I personally think that this is gonna be driven more by AR instead of VR, because nobody, unless until you have something that doesn't look like a tank on your face. But like with AR, you just, you know, you can put on glasses and then expand whatever it is that you have in front of your eyes. But I also did see like certain VR-based very interesting use cases where you just have more workspace. If you put on the goggles and then you have like 6 or 8 different monitors, like that's amazing for traveling. Imagine how much stuff you can get done.
Well, you would just be a little productivity monster after that. I mean, you already are. But in terms of, like, I definitely agree with you. And I think that we've been kind of looking at a lot of this metaverse stuff from the wrong perspective. Like, we're trying to make it something that it's not right now. Like, we're trying to create, like, there's so many competing worlds. And like, I don't want to live in a world that is what a lot of these companies are saying that it's supposed to be, which is like everything you do in real life, you will be doing in this pixelated land that we are creating. I'm like, no, thanks. I'm good. No, that doesn't sound appealing to me at all. And if that's, you know, the selling point, then I'm going to have to pass on that. I'm going to AI now.
Yeah, I think it can enable different social, like very important social participation for various groups of people. Like obviously, I always have issues with economy of such endeavors, because typically it's like it can be a bit more mature, I would say. But like super interested to see what comes out of it. Like with Decentraland, for instance, like we've seen, like there was also some thought around like the actual activity in that particular metaverse, but it wasn't necessarily. It's the same stuff as with Binance. like people just post something they saw somewhere else, so the activity is there. But like I'm very interested to see where all of this ends up, because I'm not entirely sure that the business world is going to move to the metaverse to have meetings in a virtual room, because people have Zoom fatigue right now. So why would they even want to take it further?
That's a good point. Yep.
Yeah.
And on that positive note,
right.
No, I want to thank you so much for doing this, guys. I really do appreciate it. And I definitely love the fact that we didn't spend too much time on the negative. Wink, wink. But I think there's a lot to learn and to kind of, glean from what happened this past year. And maybe someone looking at this in next year is going to be like, damn, that was a really bad year. And 2023 turned out to be amazing. So hopefully, we're on the right track. Just as long as we don't listen to Nick and his negative thoughts on macro.
Nick alone has the weight to bring down the entire equity market with his one
sure.
I'm pretty sure. Honestly, I think it's that time when we can focus on a lot of the things we can improve. I mean, if you guys are still here, and a lot of the people that I've learned to really come to respect, like in the space as well, like I think the space is going to be able to return. Like crypto will come back. It will. The time horizon might vary from what most people are projecting, but I think that the bright minds, so long as they stay here and we start to see that right momentum coming in towards the close of hopefully next year, then I think that things can start to come back maybe even earlier than expected. But it's going to take a lot of bold people coming forward with some really interesting ideas. And I'm like a pragmatic optimist. I generally believe that the number goes up and to the right. I believe that innovation goes up and to the right, but sometimes, as with every cycle, there's always going to be periods where we get ahead of ourselves in expectations, and we got to go back to the drawing board. So now's the time for it.
Yep.
So
now that is a positive note. That's how we're going to end this. All right. Thank you guys so much. I really appreciate it. And
Thank you,
have a great weekend and enjoy the rest of your Friday evening. Sorry for taking up so much of it.
No, it was all good. It's nice getting to chat with you guys. Nice seeing you, Teddy and Anthony, and nice seeing you as well, Alex. Take care, guys.
Awesome seeing you. Bye-bye. Thanks.